Welcome to this step-by-step tutorial on how to configure permanent differences in Oracle Tax Reporting Cloud. During system setup, implementation, or as part of your ongoing tax reporting, you'll add and configure accounts for permanent differences. Permanent differences are national or regional reconciling amounts due to their non-deductibility or inclusion for federal or regional or state tax purposes. Examples include fines and penalties, up to 50% of meals and entertainment, certain life insurance proceeds, and so on. These amounts are stored in members of the account dimension under TRCS_PERM-GS total or TRCS_PERM-ST total. When reconciling permanent differences at the national level, note that differences can exist when reconciling from a reporting standard to a statutory standard, or when reconciling from the statutory standard to a tax reporting standard. For example, say your reporting standard is IFRS and the tax return basis in the UK is UK GAAP. Any permanent differences are entered in accounts under the GAAP to Stat parent. Reconciling from UK GAAP to taxable income, these permanent differences are entered under the Stat to Tax parent. In the sample application, you can see the permanent differences already defined. I'll add a national permanent difference for life insurance proceeds. I'll add it under Permanent Differences, Stat to Tax. Note that you can place these accounts in hierarchies. They don't have to exist in a flat structure under a parent. I've located the Permanent Differences, Stat to Tax parent member, so now I can add the new permanent difference account. I'll enter the name and alias. For account type and time balance, best practice is to select Asset and Flow, respectively. For data storage, best practice here is to use Store or Never Share. Use the Dynamic Calc setting for any parent members added. For plan type, ensure Consol is selected. It's important to note that for optimal performance, these new accounts should be excluded from the Rates plan type. I'll open the Attribute Values tab to assign attributes to this account. These attributes apply only to base accounts. For tax type, I'll select National, although I could select National and Regional if this permanent difference is also applicable to the regional tax calculation. This attribute is required, so you must choose one. Tax data type identifies if the amount entered is pre-tax, tax-affected, or apportioned. Again, the attribute is required, so you must make a selection. Consolidated ETR flags the account to show on the effective tax rate reconciliation. This attribute needs to be attached to all permanent difference accounts. The last attribute to note is Equity Reversal Target Account. This attribute applies to equity permanent differences. Use this attribute when you don't want to record any current tax expense on this account. In the current provision, the permanent difference will be tax affected as part of the current tax per return, and then below this calculation, the tax effect will be reversed as an additional provision item. Reversal accounts should be added as base members under TRCS_Equity Reversal Total. When finished, save your changes. I'll add a regional permanent difference now. I'll search for the Total Regional Permanent Differences account and add a child below it. I'll enter a name and alias, and make the same selections as I did for the National Permanent Difference account. I'll assign attributes as well. For tax type, I'll select Regional. Tax data type is the same here as it was for National, except Apportioned is an option for a regional permanent difference. The Equity Reversal Target Account attribute also applies to regional permanent differences. When you've finished, refresh the database to incorporate all updates. Upon refresh, the permanent differences will show in the current provision, National and Regional. I'll check the current provision to see the new account. I can see the account has been added. I'll open the Current Provision Regional form to see the new regional permanent difference. All adjustments in the application are set up to flow to the Consolidated Effective Tax Rate form. If you have many permanent difference accounts to add, you can import them or use SmartView. Once the permanent difference accounts are configured, you can manually enter adjustments or use tax automation to populate the accounts. In this tutorial, you learned how to configure permanent differences in Oracle Tax Reporting Cloud. To learn more, visit cloud.oracle.com.